All right, so today we're tackling what might be one of the toughest challenges in trading, how to actually spot a market top. We're going to decode the warning signs that can help you see a major reversal before it all comes tumbling down. Let's jump right in.
I mean, come on. It's the question that haunts every single one of us, right? That awful feeling of watching a stock you own hit its peak and then just crater, knowing you missed that perfect exit. Most people will tell you that picking a top is impossible, it's a fool's game. But what if it's not? What if there are clear signals we can learn to read?
And that right there is the whole point of our deep dive today. Predicting a market top isn't about some kind of magic crystal ball. It's about learning to read the language of the market, the technical clues that are hiding in plain sight. So let's unpack exactly what those clues look like. Okay, so before we even glance at a single chart, we have to get inside the minds of the traders. See, market trends aren't just some random squiggly lines. They're driven by really powerful, predictable human emotions.
Pretty much every single rally follows this exact emotional roadmap. It starts with some cautious optimism. Then, as prices start to climb, that optimism slowly morphs into greed. But the peak, the absolute top of the emotional roller coaster, that's euphoria. And that's the real danger zone. It's the point where everyone is convinced the stock can only go up, and they become completely blind to risk.
And this euphoric phase is where the weak hands make their grand entrance. They're the latecomers, the ones who get swept up in all the hype and FOMO, and they pile in right at the very top. All of their frantic buying is what creates that final, massive, almost vertical surge in price. We call that a blow-off top, and it is one of the biggest, brightest red flags you will ever see.
Now, while the weak hands are in a buying frenzy, something else is happening, kind of behind the curtain. It's called distribution, and this is so important. The strong hands, the smart, informed money, they're quietly, methodically selling all of their shares to that euphoric crowd. They're heading for the exits while the party is still raging.
And this right here, this is the great transfer of risk in action. You have the strong hands who are selling into all that strength because they see the warning signs, and at the exact same time, you've got the weak hands buying at the peak, driven by pure emotion. That precise moment, that transaction between the smart money and the emotional crowd, that is literally what creates a market top.
Okay, enough with the theory. Let's get our hands dirty with a real-world example and see how this psychology actually plays out on a price chart. We're going to take a look at a really classic topping pattern in the stock Schlumberger.
So, let's set the scene here. It's June of 2014. Schlumberger stock is absolutely on fire. It's hitting a brand new all-time high, and it's doing it on huge volume. Now, to the average trader looking at this, it looks like a rocket ship taking off, a can't-miss, surefire bet. But the smart money was seeing something totally different. And boom, here is the first massive, blaring red flag. Right after that incredible breakout, the rally just fizzled out. The stock didn't just pull back a little bit, it completely collapsed, wiping out 100% of that breakout move. This is what's called a first failure event, and it's a critical sign that the bulls are gassing out. And that failure, that was just the beginning. While the price was kind of floundering around trying to recover, the on-balance volume indicator, which is a great way to track money flow, was just steadily falling off a cliff. That's a textbook sign of distribution. So you put the first failure together with that falling volume, and what do you get? A perfect bearish double top pattern right before the stock absolutely fell apart. Okay, so it's one thing to spot a top after the fact, but the real question is, how do you actually act on this information in real time as it's happening? Let's talk strategy and, just as important, how to tell a real breakdown from a sneaky fake out. So what does a real breakdown look like? Well, first, you need high volume. That's your proof that the sellers are serious. Second, it's got to be a decisive drop below a key support level. You have to be super careful with those little quick dips below support, because a lot of times those are just bear traps designed to trick you into selling right before the price rips back up. And here's your secret weapon for sniffing out those fake outs. Always watch the OBV. If the price breaks down to a new low, but the OBV indicator doesn't, that is a major warning sign. It's called a bullish divergence, and it's basically the market telling you that the selling pressure isn't real. You could be walking right into a trap. Let's put all these pieces together with one more fantastic example.
This time, we're looking at a biotech company called Geron, which gave us a textbook example of a blow-off top, followed by a very clear, very tradable pattern. I mean, just look at the absolute mania on this chart. The stock rips an incredible 500% higher in just a few months. Then, at the very, very peak, the volume explodes to 20 times the daily average. This isn't just bullish anymore. This is pure, unadulterated euphoria. This is the very definition of a blow-off top.
So after that massive climax, the stock didn't just fall off a cliff. It started to build a classic topping pattern, a descending triangle. You can see it clear as day. The sellers keep pushing the price down, creating a series of lower highs, while the buyers are desperately trying to hold that horizontal support line. It's a battle, and you can see who's slowly but surely winning. So how would you actually trade this setup? Well, once you see that third lower high confirm the pattern, that's your signal. That's your green light to enter a short position. And the beauty of a pattern like this is that your risk is crystal clear. You just place your stop loss right above that descending trend line. Clean and simple.
All right, we have covered a ton of ground here, from the psychology of the crowd to specific chart patterns you can look for. So let's boil this all down into a few key principles that you can take with you. So here it is, your takeaway checklist. First, always be on the lookout for euphoria, that final crazy blast of buying on massive volume. Second, if you see a big breakout completely reverse on itself, that is a huge red flag. Third, never trust price alone. Always confirm what you're seeing with a volume indicator like OBV. And finally, be patient. Wait for that clear, decisive, high-volume break of support before you make your move.
When you get right down to it, every chart tells a very human story. It's a story about the constant battle between greed and fear. The signals, the clues, they're all there if you know how to look for them. The only real question left is, are you listening?